Hello students and welcome back to another video of Eabd. Today we'll be conducting second part of unit 3. Okay, we'll understanding production function here in this unit. I hope you have gone through last unit, uh, last video. Please go through it, watch them. I'll be sending them again in the group because I know there are new journeys. Okay, so please go through it. You can also subscribe to my channel and so that you would be notified about the new videos coming in, and also you can watch all my old videos over there. I've made a separate playlist of MBA first semester EABD subject. You can watch that, go to that playlist and watch all the videos uh, till date, right? So please go through it and let's study. I'll share my screen with you all now. Yes, in this particular unit, we'll be studying production function. Now, let's understand what is production. Production is an organized activity of converting inputs into outputs or creation of value and utility. And during this process of production, what are the factors of production used? It is land, labor, capital, and organization. What are the rewards that what is the price that we pay for it? For land, we pay rent. For labor, we pay wages. For capital, we pay interest. For organization, we generate profit, right? So this is how the production happens. Now, production function states the relationship between inputs and outputs, of course. Now, what are the inputs? The factors of production classified as land, that is all natural resources of the earth. Price paid to acquire land is rent. Labor, all physical and mental human effort involved in production. Price paid to labor is wages. Capital, building, machinery, equipments, uh, not used for your own sake, but for the contribution towards the production. And price paid for capital is interest. Okay, so this is what is production function, that is converting inputs into outputs. Now the physical relationship between physical inputs and physical output, this is what in this particular equation, that is Q quantity of output is equal to function of A capital and L labor. Okay, now let's understand the relation between input output, right? Production is an output that creates present or future utility. Now it requires land, labor, capital, technology, energy, etc., to convert input into output and make a product into a utility. Now, production function describes how inputs are transferred into outputs. Let's understand with the help of a statement given by Professor Samuelson. Let's read it. The production function is the technical relationship between the maximum amount of output that can be produced by each and every set of specified inputs. It is defined for a given state of technical knowledge. Now, for each different combination of inputs, the production function tells us the maximum quantity of output a firm can produce over some period of time. Let's understand the help of this diagram. Now, inputs are land, labor, capital. They are put into the process of generating product or service, that is value added is done, and then you get a output. Now, in which proportion, which combination these inputs will be used is different, right? So, alternative input combinations, different quantities of output. As you change the input combinations, the output combination will change. Now, let's understand the cost of production. Now, before that, we'll understand various type of costs, right? These question is very important from your short note point of view. Okay, and also from future presentations and future units we'll be covering. This is very important to understand the concepts. Now, private cost. Now, what is the private cost? For a producer of a good, service or activity include the cost the firm pays to purchase capital equipment, hire labor, and buy materials or other inputs. So, the private cost of driving a car include the fuel and oil, maintenance, depreciation, and even the drive time experienced by the operator of the car. Right? So, that is private cost. And what is social cost? It includes both private cost and any other external cost to society arising from the production or consumption of a good or services. Like environmental pollution is an example of social cost that is seldom borne completely by the polluter, thereby creating a negative externality. So, social cost includes both private cost as well as external cost. For example, the social costs include all these private costs like fuel, oil, maintenance, insurance, depreciation, operators, driving time, etc. And also the cost experienced by people other than the operator who are exposed to the congestion and air pollution resulting from the use of the car. So is it clear now what is social cost? Let's understand what is accounting cost. Accounting cost is also called explicit cost. Now, actual money spent in purchasing or hiring services of factors. Cost as stated in the books of accounts, they are explicit cost only. So an accountant's notion of cost involves only the firm's explicit cost, the firm's actual cash payments for its inputs. That is explicit, that is accounting cost, which is accounted in the books of accounts. And what is the economic cost? Now, the key principle underlying the computation of economic cost is opportunity cost. Do you remember opportunity cost you have studied in first unit? So the principle of opportunity cost, what says the cost of something is what you sacrifice to get it. So opportunity cost return from the second best use of firm's resources, which the firm forgoes in order to avail the return. So that is opportunity cost. Thus, economic cost includes both the normal return on money capital invested by the entrepreneur himself in his own business and the wages or salary not paid to the entrepreneur but could have been earned if the entrepreneur would have sold his services somewhere else. So economic cost, it includes both. Okay, so let's understand the difference between accounting cost and economic cost. Now, the real, that is economic cost of production usually exceeds the accounting that is cost, bookkeeping cost, because economic cost has more into it. Because economic cost include both explicit cost and implicit cost. It includes both, but accounting cost includes only explicit cost. Okay, if it is multiple choice question, it's important. So the value of the personal resources the owners of a firm make available, for example, their labor and capital. Okay, so economic cost is a sum of explicit and implicit cost. That is, economic cost includes both explicit and implicit. Implicit means opportunity cost. Okay, let's understand with the help of an example. Just observe it. Okay. Now, total sales revenue was $130,000. It is just shifted. Now, cost of raw material is 85. Employee wages is 20. Miscellaneous expenses is 5,000. Taxes is 5,000. Advertising expenses is 10,000. So, total explicit cost is 1,25,000. It is deducted from 1,30,000. So, how much you get? You get 5,000. So, net accounting profit is 5,000. That is 1,30,000 minus 1,25,000. You forgot to subtract implicit cost from here, right? So salary and interest that a entrepreneur would have earned if you would have sold his services somewhere else or if invested capital somewhere else. So it is 31,000. If you deduct 31,000 from 5,000, it comes minus 26,000. So economic profit, that's negative, a loss of minus 26,000. Understood? So this is how it is calculated. Now, the next concept is, just what you've done, economies of scale. Now, when the firm experiences economies of scale, per unit costs are falling. So that is, when firm experiences economies of scale, it increasing sales of returns and long run average cost curve declines. Your per unit cost of falling. So economies of scale means you're getting more out of it. Your cost is falling, per unit cost is falling. So a proportional increase in all inputs increases output by a greater proportion. So it's like if you increase input by a small proportion, output increases by a greater proportion, because now you're having economies of scale. Per unit cost of producing a unit is falling. So as output increases by some percentage, total cost of production increases by some lesser percentage, right? So why these economies of scales occur? क्यों होता है ये? So there are internal as well as external economies. So let's understand internal economies of scale. Now, let's understand before that, like reasons why there are long run economies, like specialization in the use of labor and capital. Prices of inputs may fall as the firm rises volume discounts in its purchasing. And another thing can be use of capital equipment with better price performance ratios, or larger firms may be able to raise funds in capital markets at lower cost than smaller firms, or larger firms may be able to spread out promotional costs, right? So this can be a reason of economies of scale. Let's understand this different internal economies of scale one by one. Watch it. It's very interesting and related. Okay, related to the real life examples. Now, the first one is labor economies. So some economies of scale result from the specialization and division of labor. Hiring more workers means that job can be divided and subdivided. So instead of performing 5 or 6 distinct operations in the productive process, each worker may now will just have one task to perform. So workers can be used full time on those particular operations at which they have special skills. So, but in small plant, skilled mechanists may spend half his time performing unskilled tasks, resulting in higher production cost. So finally, greater specialization tends to eliminate the loss of time that accompanies the shifting of workers from one job to another. So this is how labor economies comes into place in case of large firms mostly. Then the next is commercial economies. When you say commercial economies, you mean volume discounts. That is, when a firm produces a high output levels, it needs large volume of inputs, of course, and can take advantage of the associated price discounts to reduce its per unit cost. So if you're ordering in bulk, you get discount, right? So if the company is large enough, it may have strong negotiating power as well on this point, and can have goods at lesser prices and more discounts and more credit period. So this can be a benefit, and this can bring in internal economies. The next internal economies of scale is technical economies. That is, businesses with large scale production can use more advanced machinery or use existing machinery more efficiently, whatever. So this may include using mass production techniques, or which are a more efficient form of production. So a larger firms can also afford to invest more in research and development, of course, and can bring in technical economics. The next one is financial economies. That is, many small businesses find it hard to obtain finance when they have to obtain it. The cost of the finance is also quite high sometimes. So this is because why the small businesses are perceived as being riskier than larger businesses that have developed a good track record, right? So larger firms therefore find it very easy to find potential lenders and to raise money at lower interest rates from the market. So this brings in financial economies, right? The next is market economies. Now, every part of marketing has a cost, like particularly promotional methods such as advertising and running a sales force, of course. So many of these marketing costs are fixed cost. And so a business gets larger. As the business gets larger, it is able to spread this cost of marketing, this cost of advertising, the cost of promotion, over a wider range of products and sales, like cutting down the average marketing cost per unit. So this brings in marketing economies. Now, what are managerial economies? Like in the case of labor we studied. So as a firm grows, there is greater potential for managers to specialize in particular tasks. For example, we have marketing manager, human resource manager, finance manager separate. Now, specialist managers are likely to be more efficient as they possess a high level of expertise, experience, and qualifications compared to one person in a smaller firm trying to do all these roles together. Okay, this is how managerial economics comes in. Now, like internal economies, there are external economies. What are external economies? External economies, the first one is economies of byproducts. Now, the production of many types of goods gives rise to economically valuable byproducts. So, large-scale firms are often able to recycle waste byproducts that smaller size firms simply have to throw away because it is not economical to do anything else with them. They don't have a capacity, whatever. For example, a small sawmill may simply throw away sawdust and old wood scraps. Many processing firms find that the volume of these waste products is large enough to warrant their resale. So this is how it can bring in. Like for example, the sawdust can be sold as a sweeping compound for cleaning floors and hallways in large buildings. Wood scrap may be packaged, processed, and sold as artificial logs for home barbecues and fireplaces. So in this way, the sale of byproducts effectively reduces the per unit cost of producing lumber in larger volumes, right? Because you're having extra income out of the byproducts as well, out of the waste as well. So, for the same reasons, large oil firms often produce a host of petroleum byproducts, right? And meat packaging firms produce fertilizers, glue, leather, and other byproducts of meat production. So, this gives economies of byproducts. These are external economies, right? The next one is transport and communication link improve. Like, for example, as the industry establishes itself and grows in the particular region, it is more likely that the government will provide better transport and communication links to improve accessibility to the region. Like, for giving you an example, this area of this MIDC area, it was not developed. If you have come here 25 years back, it was just a jungle, only few Tata Motors in the all year. But now, as industries start coming in, the small firms begin to open here. The government started making roads and developing the area, and now see this area is transformed. So this is the example of transport and communication link improves in external economies. So this will lower transport cost for firms in the areas. Its journey time will reduce and also attract more potential consumers. To give example, like the area of Scotland known as Silicon Glen has attracted many high-tech firms, and as a result, improved air and road links have been built in the region. So automatically, external economies come in. The next one is training and education becomes more focused on the industry. Like university and colleges will offer more courses. Now see, around this MIDC, so many MBA colleges have established because now there was requirement of trained staff, trained people. So they start developing, which has become more dominant in the region or nationally. So for example, there are many more IT courses being offered at colleges as the whole IT industry in the India has developed recently. So this means firms can benefit from having a larger pool of appropriately skilled workers to recruit from. Just imagine that there were no training institutes, there were no MBA institutes. How would the firm get trained people? So because of these institutes opening around, the industry gets skilled workers, skilled people, skilled managers, and it gives them external economics, right? The last one is other industries grow to support this industry. Like I was telling you, there was Tata Motors, and then somebody would providing goods to Tata Motors. They opened their industry as well beside the Tata Motors, right? So a network of suppliers who support industry may grow in size and are locate close to the main industry. This means a firm has a greater chance of finding a high quality and yet affordable supplier close to their site. The cost reduces because of that. So all these brings external economies. So this ends our second part of third unit, right? We understood very nice and interesting concepts in this particular unit. Go through it, okay? Study and understand. Read again and again. If you still don't understand, you can contact me. You can put a message in my channel. I'll come back to you. Thank you so much. Have a nice day.